Welcome to back to our chapter 1, the financial statements. In this video, we're going to start with learning objective 3, which is applying the accounting equation. This is a critical learning objective that is on your test and your final exam. So please be sure to pay close attention and refer back to this video as you study. So first we are going to look at our accounting equation right here. Assets equals liabilities plus owner's equity, or ALO for short. Assets are items that you own. Liabilities are what you owe. Owner's equity is your residual interest or retained earnings of the organization. As you can see, it must be in balance. You will also see debits equal credits. We'll be talking about that going forward. But just realize now the equality sign that assets of $1,000 must equal the summation of liabilities and owner's equity. Assets, as I mentioned, are things that you own, and it basically has a future benefit. Some examples are cash, accounts receivable, and inventory. Liabilities are outside claims or future sacrifices, which are what you owe. Examples of liability are accounts payable, what you owe vendors, loans payable, maybe taxes payable. Owner's equity are the claims of the owners in their assets. So when you purchase a piece of stock, like I mentioned, Apple, then that is basically your interest. So here we're going to have the residual earnings or retained earnings. And there is a statement that I've mentioned, statement of retained earnings, that we're also going to be discussing. So here, if we look at GAAP, for example, assets and liabilities, you'll see cash and cash equivalents. Cash equivalents are easily converted into cash within usually 90 days. Inventory, for example, for GAAP, they might have jeans and shirts, and then property, plant, and equipment, PPE. Liabilities, as I said, are accounts payable, items that you owe vendors, maybe taxes, your debt, or both current and long-term. Current means within 1 year. Things that are going to be due within 1 year, or operating cycle, whichever is greater, which usually is 1 year for organizations. So we start with our owner's equity, and I said assets equal liabilities plus owner's equity. Make sure this is in your Excel workbook. Then we can divide owner's equity into additional paid-in capital and retained earnings. So basically, additional paid-in capital is what you have invested in the corporation. So we might have common stock, and then the par value, which is just an arbitrary amount of common stock, may be $1, but you might have paid $100 for it. So that in that case, your additional paid-in capital will equal 99. The $1 par plus your 99 equals the 100 that you paid. So this is your par value, and this is your additional paid-in capital. Then you have retained earnings. And as part of retained earnings, we have revenues, which are inflows or increases from delivering goods or services. So continuing with our GAAP example, GAAP makes money by selling clothes. So if you go into a GAAP store in the mall and purchase a pair of jeans for $50, that would be revenues towards GAAP. Expenses are decreases and outflows. So for example, GAAP may have to buy the material to produce those jeans and sew them, so that would be an expense. And then dividends are what you pay out, usually cash, to your shareholders. So owner's equity does certain things. And if you'll see, we'll start with beginning. Let's just discuss retained earnings and the formula briefly for our retained earnings statement, right? So we start with the beginning balance, and then we're going to add to that net income, and then subtract dividends to get our ending balance. Now, if you'll note, net income is going to equal our revenues minus our expenses. So revenues increase our owner's equity, and expenses decrease our owner's equity, and dividends decrease, right? These are outflows of cash, and revenues. Customers are buying products, so this brings us money in. So now for retained earnings, as you can see here, we have the beginning balance. We have our net income. If it's a loss, we would subtract it. Then we're definitely going to subtract the dividends that we pay to get our ending balance. So I produced it in the previous slide vertically, and now here you see it horizontally. So at this point, I would like for you to try to complete this activity. As you're looking through this within your slideshow mode, you would get the answers. So if you see we have current assets, meaning with less than 1 year, that they will convert, right, of 360 million. We have property, plant, and equipment of 600 million, and we have other assets totaling 220 million. And our current liabilities are 210 million, and our long-term liabilities are 560. So now as we use this data to write the accounting equation, we see assets equal liabilities, and we start adding those in the appropriate spots. And as we go through that, you will see how each one falls into place, and then we can solve for our stockholders' equity amount. Now, we owe 770 to our creditors, and then we actually own 410. So be sure you understand that piece. I would encourage you now to stop and try to do this exercise and make sure you understand it as well, because it's basically similar to the others. Now let's move on to Learning Objective 4, where we're actually talking about the financial statements. So basically, I was telling you there are several financial statements. So you see here the income statement, the statement of retained earnings. You see the balance sheet and the statements of cash flows. This is the order in which we prepare the statements. And as you can see, our income statement, we have revenues minus expenses equal net income. The reason we prepare this first is we use this number here in our statement of retained earnings. So here we have our beginning balance of retained earnings. We add our net income or subtract our net loss, which we calculated above, subtract the dividends, declared, doesn't necessarily have to mean paid. Notice in declared because we use accrual accounting, and we'll be discussing that concept later on. Our balance sheet, so here we need our ending retained earnings, and the reason we need that is because that is part of our owner's equity, right? So assets equal liability plus owner's equity, the retained earnings are part of that owner's equity equation, hence why the balance sheet is prepared third. Lastly, we have the statement of cash flows where we're adding operating, investing, and financing activities, and we'll discuss those. And then you see we have a net increase or decrease in cash. This cash number is part of our assets. So this is how all of the financial statements are related to one another and the order in which you prepare them to ensure that you have the corresponding number to complete the next statement. So here we go. We have our income statement, and recall we have net income that flows from our income statement to our statement of retained earnings, which our formula for revenues, for net income is revenue minus expenses equal net income. So we have that beginning retained earnings. We add the net income, subtract the dividends to get our ending balance in retained earnings. So that we need that ending balance in retained earnings then gets transferred to our balance sheet. And then that ending balance, we have assets equal liability plus owner's equity, and here is where we add the ending balance of retained earnings. Then lastly, we have our statement of cash flows, in which we need the asset here of cash to know that final balance to prepare our statement of cash flows. So make sure all of these Excel formulas now that we discussed are on here. Notice revenues and gains, expense and losses. Our bottom line is net income or net loss, or we might also call that net earnings. This is a great formula to have in your Excel workbook. And here is what our income statement looks like. So this is also a nice schematic and template that you should put into Excel. So you should have these numbers, and then we will be creating formulas for these that take your net sales and net sales here minus all of these assets, these expenses, excuse me. At this point, take a moment and solve this problem. This is also part of your My Accounting Lab. It is part of the Chapter 1 practice problems, which are ungraded. Now for our statement of retained earnings. So here we're taking our net income and we're actually using that to see if our net income increases retained earnings and to see how much our total retained earnings are. This is what the consolidated statements of retained earnings looks like. So there you should also put this in Excel, and notice we have the beginning balance here plus our net income minus our cash dividends equals our ending balance, and we just roll it forward. So we go from 2010 to 12 to 11 to 12. We call that a roll forward. Take this opportunity and pause the video at this point and go ahead and try and complete this exercise, and you will see the correct answers in your practice problem activity in My Accounting Lab. Now we have our balance sheet, and our balance sheet is also known as the statement of financial position, and this is prepared as of a point in time, for example, as of December 31st. And here are our three items reported. Assets equal liability plus owner's equity, and basically, and this is our time period for it. We also we divide our balance sheet, we classify it into different areas. So for example, anything that will be used or consumed in the next 12 months is classified as current. Anything greater than 12 months would be considered long-term. Cash and cash equivalents, short-term investments, accounts and notes receivable, inventory, and prepaid expenses. This is considered an accrual, and we're going to talk about that because expenses are usually decreases, and they would decrease your retained earnings. But in this case, since it is prepaid, all you're doing is converting one asset cash for another. And you will see what each category includes. So our short-term investments, you're going to sell those within the year. Accounts receivable is usually your unwritten credit terms to customers so they can pay you later. For example, if you buy something and then you pay it 30 days later. Inventory is merchandise that you are selling to customers. In the case of GAAP, maybe they don't actually produce the clothes, they buy them, and when they do, then that would store it as inventory to make sure that they have the clothing stock that you need so when you go to the store, you actually have it. So long-term assets are greater than 1 year, and property, plant, and equipment is a common long-term asset. So anything that the company owns is land, buildings, computer, and equipment. Keep in mind, land is not depreciated. We're going to talk about this going forward, but just keep that in mind. Accumulated depreciation is your usage and wear and tear of your assets, and you're actually recording that. We'll talk more about that. You have then long-term investments, any type of treasury securities or any security that you're going to hold for more than 1 year. And intangibles is patents, trademarks, and copyright, no physical substance. So notice this should also be in your Excel workbook, and here you see current assets and long-term assets, and so this is our total assets. So we know that for 2012 we have total assets of $7.4 million, as you can see here. So we know that our liabilities plus owner's equity is also going to equal that amount. So current liabilities similar to assets within a year. Accounts payable is usually what you pay your vendors. So that's usually the first liability listed. Income taxes payable you have to owe to the government. Accrued expenses are liabilities such as maybe interest that you have to pay and liabilities for salaries. So anything that you have to accrue for, and we're going to talk about accrual accounting in more detail in a later chapter. Long-term liabilities may include notes payable and bonds payable. And now we see, we're back to the GAAP financial statements, and now we see the liability section of current liabilities and long-term liabilities. And you see this amount does not equal our total assets, but we still need to go over now the stockholders' equity section. So stockholders' equity basically includes common stock, additional paid-in capital, our retained earnings, and our treasury stock. So our common stock is just shares that are purchased by shareholders. It might also be preferred stock. Then additional paid-in capital is any excess of par that we have. So remember, I used the example, if there's $1 par but you paid $100, then your additional paid-in capital will be $99. You have your retained earnings, which we talked about. Treasury stock is any time a company purchased their own stock back. And then you have other comprehensive income, accumulated other comprehensive income, and this is items that were prescribed by FASB that have to be recorded directly into the statement into the stockholders' equity section. Now we have our full stockholders' equity section for GAAP here, and as you see, Our 7422 now million does equal our assets. And we have our retained earnings right here, which we know equals beginning balance plus net income minus our dividends to equal our ending balance. Stop at this point now and complete this exercise 12. This is also in your practice problems in my accounting lab, and be sure you understand that. And our last statement is our statement of cash flows, which pretty much shows cash receipts, money that you get in from your customers, and payments, money that you pay out. The statement of cash flows is divided into 3 sections: operating activities, which is just your normal day-to-day operations of the company, how cash was used for that. Investing, when you are buying long-term assets, maybe like property, plant, and equipment. Financing, how you are actually getting that money. There are 2 ways to finance. If you recall in the accounting equation, liabilities with debt, or equity, which is your selling of your stocks. And here is the statement of cash flows for GAAP, and we have operating, investing, and financing activity. And notice this amount here will be on your balance sheet, listed as cash. Now let's go through this activity. If you are in slideshow mode, you will see revenues are reported on the income statement. Dividends are on the statement of cash flows and the statement of retained earnings. It's part of the formula. Your current liabilities are in your balance sheet under liabilities. Your total assets are also in your balance sheet. And SG&A, selling, general, and admin expenses are part of your income statement. And then you can go ahead and make sure that you understand where all of these pieces lie. And that will conclude our lesson for this video.